Hello, good morning, everyone. Today I'm very happy to be with you all today to give you an introduction to sales and trading, private banking, and asset management. So, over the next hour, I'm going to explain to you the basic concepts of sales and trading as well as private banking and asset management, and the structure is going to be as follows. So, first of all, I'll give you an overview of the basic requirements and what exactly is sales and trading. And then I'm going to give you like an explanation of what are the job duties of sales and trading and as well as the career path, as in what kind of prospect you have, where can you go after working in sales and trading after 4 or 5 years. I'm going to also tell you about the main market players in industry right now. Then I'm going to move on to private banking and asset management. I think that's the area which more people are curious about right now because that's more like the future of the whole industry. And I'm also going to tell you about the job duties of private banking and asset management, as well as the career path. So to start off with, what exactly is sales and trading? So sales and trading is basically regarded as a global markets division in many investment banks. So in some banks you might see the term security services. Uh, Interesting enough, even though some companies use the same term security services, um, but they actually also referring to sales and trading. So if you see some posts saying they're in global markets, they're in sales and trading, or they're in security services, they're basically performing the function of sales and trading. So which is going to be what I'm going to talk about in the next half an hour. So uh, what are the major products that are available uh, in the sales and trading division right now? So if you have to buy, if you have separate these products by these products, you can have like cash equities, cash bonds, which include corporate IG bonds, investment grade bonds, and also high yield bonds. At the same time, you also have some more macro side of things, which is basically interest rates, which include interest rate swaps, cross currency swaps, and also FX products, which include FX forwards, FX spots, and as well as FX swaps. And you also have the e-trading of all of these. So you have the e-trading of equities, fixed income, as well as FX. So moving on to more the exotic side and I would say the safer side of the job, because these jobs are harder to be replaced by computers. You have the derivatives desk, which the French banks are really good in them. Let's say SocGen, BNP, they're really good in derivatives, especially in Delta One trading and also options trading. And you also have some index and quants. So what quants do? It's basically they are the mathy guys, they're the programming guys that have a bit understanding of finance, and they basically provide all the infrastructure and all the softwares needed for these sales and trading guys to perform the function of sales and trading. Let's say they have like a really complicated model for the traders, so traders can utilize them on a day-to-day basis. So quants actually work really, really closely with sales and traders. So they're different from the engineers in the back end, because the engineers in the back end they're involved in business in terms of like the actual infrastructure of of the business of the company systems. But if you're actually a quant, you have all those mathematical background in you, like uh, multi-dimensional Monte Carlo simulation, those kind of like really quanty exotic stuffs. So this is basically how you can separate everything in session trading by product class. Well, if you wanna talk about the clients covered in session trading, you have many different kind of clients. So first of all, you have like the central banks. Uh, so if central banks want to do some kind of actions in the market, which you probably wouldn't know, they would just do it through some investment banks. Let's say if one day central bank of uh, some countries want to do some kind of like some operations to maintain the currency level of the country, then they might want to find Goldman Sachs or JP Morgan to do that kind of operation. So that's what central banks usually do with those um, investment banks when it comes to selling trading. And obviously, you also have like some banks as in like Chinese banks. So in these Chinese banks, there are some kind of like dealer desks. So they need some kind of liquidity, especially for quarter end, to cover some kind of like short cash position, or they also have their own book that they're running for the whole bank. So they usually approach like market making firms on the sell side to ask for a price, which is basically what you do as a trader in the sell side. So that's basically what session trading does, and I'm going to talk a bit more about that uh, soon. And you also have some kind of like non-bank financial institutions, pension funds, or you also have some kind of like asset managers that's gonna also ask you for the price. Let's say if BlackRock want to buy like a FX swap, or they want to buy like a equity product, or they want to buy like a stock, they're gonna approach Goldman Sachs for a price and gonna ask for a price, and Goldman Sachs gonna provide them with a two-way price. And last but not least, you have corporate, which usually need like these kind of products for actual hedging needs, because let's say if you like a company uh, in a in a local country, and you basically all your costs come from that kind of like local currency. So you basically short that currency, and all your exports going to go into the states most likely, or some more developed countries. So you basically long that currency of that country. So your natural exposure in terms of FX pair is going to be long that foreign currency versus your domestic currency. So what you're going to do is going to approach these banks to go to the session trading desk and ask for a price to hedge out that kind of risk. So that's what corporates usually do. So moving on, just to give you a quick overview of what middle and back office are. So these are the main teams here, right? So you can separate them into five main functions. So compliance, operation, internal audit, finance, and risk management. So I'll say risk management is the part which is working. Risk management and operations, especially trade support and settlement. These are the teams that work most closely with traders. So risk management is basically the ones setting limit and implementing the limit on traders. So let's say if you're a trader on some kind of like interest rate products, you cannot exceed a certain level of DV01, which is a typical measure of interest rate risk run by traders. Whereas if you're in the settlement team or in the trade support team, what you do is if you're in the trade support team, you support traders in every single way you can, whether it's like helping booking some trades, clearing some booking issues, giving advice on as in how to book a trade, or if you're in settlement, you actually handle some kind of like settlement issues with counterparties, because traders might have agreed with the price with counterparties, but because of some like documentations, onboarding, those kind of stuff, you might not be able to settle with the clients or the counterparty, which could be other banks, promptly. So that's why you need these middle office and back office teams, and you have to work closer with them on a day-to-day basis, just to make sure everything will run closely from the front end to the back end and back up to the front end. So this is how basically front office session trading, middle office and back office work closely together on a day-to-day basis. So I guess all of you is gonna be really interested in like how much you're gonna earn in session trading. I would say the number here it's kind of accurate, but it's not comprehensive. So if you talk about the major banks out there, I would say the American banks usually got a bit higher pay. So it's more like in a higher range of this 50 to 70K bound. But you also have some kind of like European names which also offer you some really attractive compensation up to the high band, which is really 70K. But you also have some kind of like really good small brokerage firms like some Asian names like um, some Asian names or some Chinese names which offer you somewhere in the boundary of the lower bound around like 30 to like 50K, which gives you really good exposure as well. But all these salary here, it actually doesn't include the bonus. Bonus used to be pretty decent in the past couple of years, but this year or the past, bonus actually it's not that. It's not. I would say it's not that. Um, it's not that good compared to the past because of some kind of like regulations and because of in general market behavior, market performance as well. But I guess down the road it's still going to be really decent, especially you're going to have like like 1.5 million plus after working for 5 years. Working hours, depending on the desk you're going to work in. If you're going to work for equities desk, you're going to start a bit earlier, around like 6 to 6:30, but you also end a bit um, earlier as well. So you're going to end around like 6 or even 5:30 a.m. But obviously, if you're like a junior for the team, you're going to have to run some P&L reports, and then you're going to have to do some kind of like Excel spreadsheets, daily maintenance work for the team. So usually after market hours, you're still gonna have to stay for like 1 hour, 1.5 hour more for these kind of like daily stuff. But in general, I would say a typical working hour for sales or traders who have been working for like 3, 4 years, or even typically like 3, 4 years, it's gonna be pretty decent, around like 10 to 11 hours. But the downside is you might have to stay on the desk during lunchtime, depending on the preference of your boss. So if you're gonna work for the FX team, you might come in at around like 7:30 or 8, and you're gonna leave at around like 6 or like 6:30. So hours pretty decent in general. Um, Whereas if you're in a more exotic team where you have like exotics products trading, then that's gonna be a bit like more frustrating for you guys, because that's gonna make you um, have like that's gonna give you like a working hour of around like uh, 12 to 13 hours, depending on you actually on some kind of like live trades where you have to price some really complicated products, and otherwise that's not really like that long hours compared to IBD. So I'm sure like a lot of you guys are comparing between IBD and session trading. It's pretty safe to say you actually got a life if you work in session trading, but if you're in IBD, you probably won't have that kind of free time even during weekends. For the fact that you have a lot of like Excel work, PowerPoint work, and you also have a lot of like client decks that you have to do. But I would say your hours in session trading are really more confined to the market trading hours. So basically, if market's off, then um, you don't have much to do if you're like a more senior guy. Let's say if you've been working for like 4 or 5 years in the industry. Um, but the fact is just that we have like much more stress working in certain trading, especially if markets really volatile. You basically don't have the chance to get off your desk, apart from really quick toilet breaks, like 2 3 minutes. So that's the actual case for people working in certain trading. So just to give you a heads up on how hectic it would be throughout the day. So um, comparing with private banking asset management, which I'm gonna cover in more in depth detail over the next 45 minutes. So obviously, working hours is gonna be even easier for private banking and asset management, but obviously they don't have much. They don't have um, that good of a pay in the entry level. So if you're really someone looking after the money, or you're looking after really something exciting and challenging for your next 4 or 5 years, I would say session trading is something that you're going to consider over the next 4 or 5 years. Um, so moving on, right, we're going to go to something more concrete about session trading, as in like guiding you through how you can walk into uh, how you can open up the doors of session trading. So I would say nowadays some like the requirements here they're mostly requirements for big banks, um, like the top bulge brackets, or uh, including HSBC and the French banks. Um, I would say in general, especially for the American banks, I would say the standards for graduates, they're in the top notch still. So they usually only consider Big Three candidates, or overseas universities, and obviously most of the overseas guys got um, some masters as well. So they also have like 1 to 2, like not 1 to 2, but actually like 2 to 3, or even 3 or 4 internship experiences in banking. So I would say some typical paths of students that I've seen that they've taken was basically spending the first year of the summer internship in commercial banks or in local banks, and then or they spend the time over the summer back in China for some kind of like experiences working in small asset management companies or private equity firms. And over the next year, they work really hard get really decent GPA, go for case competitions, and then they basically got into a small brokerage firm or like a small such and trading company, whether it's like Chinese name, through connections or through recommendations or through referrals, and then the third summer, like when they're in year three, they're gonna apply for like certain trading in like second tier investment banks, possibly, or possibly could be some French banks or some smaller banks, and then if they actually fail that, they would do a gap year internship in like American banks or in French banks as well, or in HSBC, because these banks usually offer gap year internship as well. And some of them would then take on like a master's program, studying top universities overseas, especially in the States, or some of them go to the UK because of the culture, or maybe somewhere in France or in European business schools like Copenhagen Business School, or even some business school in Switzerland. So I think that's like a pretty typical path for candidates I've seen in the past couple of years getting into certain trading. So I think actually technical knowledge, it really depends on what kind of role you're looking into. If you're looking for like a sales role, I would say really it's not really a technical job, because think about it, all these banks gonna give you like a 1 month training in the States, in London or in Singapore or even in Hong Kong. So if they're gonna give you all these kind of technical knowledge training, it in some sense it actually means that they don't really need you to be super sufficient, or you don't have to be super sophisticated if you're trying to be a sales. But I would say, to be fair, if you want to become like a trader or a structurer, you need more technical knowledge, and at least you need to know the basics of derivative. You need to know the basics of the product that you're actually trading, or the basics of the products that of the desk that you're gonna join. So I would say, I mean, this is actually pretty fair, because if you're like a trader or a structurer, you're actually the one pricing it, or you're the one giving the price in markets every day. So it's actually pretty fair for the interviewer to ask you for these questions. And depending on your luck, you actually get some sales or some traders or structurers interviewing you. So even if you're applying for like a sales role, it doesn't mean you're just gonna interview with a sales. It's actually not the case. So there might be still decent chance that you're gonna interview with traders or structurers. So if you see a structurer or like a trader, inevitably I'll say they're gonna ask you more technical questions. Whereas if you're facing a sales, naturally they're gonna get to know more about you as a person, or they're gonna ask you more like behavioral questions, or just in general views about the markets. So it really depends on your luck. So like from my personal experience back in the days when I was a student many years ago, 4 or 5 years ago, I would say what I would suggest you to do is basically stick with the path of applying for commercial banker internships, or internships with regulators, or internships with some really small finance companies, to get started in year one, December, or year one summer, and then this is going to be a really good stepping stone for you. And if you're keen enough, you can apply for winter internships, and you're gonna have like 2 internships by the end of your second year summer. So you're gonna apply for like some internships in like commercial banks or small asset management companies for your second year. So if you're ambitious enough, then apply for bulge bracket or like Chinese banks in certain trading in your year three or in year four. And then I'll say the better path right now is to apply for like a master's program if you're not going into a really top university for your bachelor studies. I would say these banks still kind of have like a bias towards international or more international background. So even if you go to like a really decent program like global business studies or quantitative finance in Hong Kong, I still think it makes more sense for you to do like a master's program, um, for the fact that it's gonna be like um, it's gonna give you like a more international background, which is gonna make you fit more into these international banks with international working environment. Um, so just a bit about like sell side and buy side. So what do we mean by sell side? So sell side basically is just selling trading. So don't confuse sell side with the actual duties they do. So sell side actually do both selling and buying as well. So what they do is basically they provide liquidity in the markets. So you have a trader in the sell side, let's say Goldman Sachs, who provides the liquidity of these instruments. Let's say someone wants to buy this FX product, or someone wants to buy this like equity product. You're gonna quote this guy a two-way price depending on market positioning, depending on your own positioning, and then he's gonna hit you whether he's gonna buy from you, so he's gonna lift your offer, or he's gonna sell it to you that he's gonna hit your bid. So and then you're gonna hedge your flows with another client, or you're gonna hedge it in the interbank market. So you provide liquidity in the markets because these buy side guys, private banking, asset managers, hedge fund managers, or fund houses, they're gonna ask investment banks, certain trading for a price, and then they're gonna ask you for the liquidity because that's the only way they can actually get involved or get access to these markets. So this is just a simple overview of what sell side and buy side is, which I'm going to go into a bit more detail in the next couple of slides. So